Today on Focus on Investing, we're going to do a live stock analysis. This request was brought to us by Vino Franklin, and he said, can you make a video on HCMC? Would that be a good investment? All right, Vino. So today we're going to look at HCMC and take a look at the fundamentals and the technicals to look to see if this will be a good investment for you. So if we go and take a look, what is HCMC? So HCMC stands for Healthier Choices Management Corp. And according to their company overview, Healthier Choices Management Corp, or HCMC, is a US-based, publicly traded company specializing in providing consumers with healthier alternatives to everyday lifestyle choices. If we scroll down, we can see, some of the many choices' main focus. They have a HCMC intellectual property holdings. They have Healthier Choice Markets. They have the Vitamin Store, and they have Healthier Choice Wellness Center. So you can see they're in all types of things surrounding, health, wellness, fitness, along those lines. This HCMC stock has come up recently in the consciousness of, traders and investors for a multitude of reasons. One of these was that there was a potential short stop that was going to be on offer for this company. So a lot of people were kind of getting involved because they anticipated a short stop for this company. The main reason why a lot of people got involved in it was because it was involved in a lawsuit. So if we go to the HCMC Reddit, this gives us a brief overview of not only the company and what the lawsuit is. So the business behind the stock: Healthier Choices Management Corp, HCMC, operates 4 natural food and vitamin stores and 7 retail vape stores in the southeastern US, including an 18,000 square foot Adder's Natural Market and Greenleaf Grill in Fort Myers. In addition to these, HCMC owns the vitaminstore.com, an online seller of vitamins and supplements. So let's get into the lawsuit. The lawsuit was basically HCMC's owns a patent relating to the smokeless tobacco vaping technology and is the plaintiff in an active lawsuit against Philip Morris, alleging infringement of the US patent number 1010,561,170, aka the 170 patent. In the letter's flagship IQOS vape product, HCMC is represented by Coulson O'Connor. So basically, essentially what it was, a lot of people got involved into this stock because they saw this lawsuit, up and coming, and a lot of people got involved and bought stocks in anticipation that, they would win the lawsuit, and the win of the lawsuit would increase, the value of the company quite significantly. As it happens, recently, the lawsuit got dismissed. So, a lot of things that people were banking on for HCMC were thrown. Now, there are other elements to the case where they could try other things to kind of sue against Philip Morris. These kind of avenues are still open, but they're, a bit of a lifeline at this point. The main kind of body of the stock was the fact that they expected to win against Philip Morris in order to, boost the value of the company, and that didn't work. HCMC also has been making a few, acquisitions of different kind of related businesses to do with the health and wellness industry. The other thing that people are looking at is, earnings. They're hoping that earnings will boost the company stock quite significantly as well. So this is really the fundamentals around this whole stock. And if you know about anything, or if you know anything about Focus on Investing, you know that we always prefer technical analysis over fundamental analysis. And if you want to know why, there's a video on our channel that kind of covers fundamental analysis versus technical analysis. And the kind of main crux of it is, whenever you're dealing with fundamental analysis, you're dealing with speculation. All trading is speculation. And speculation is basically, you're speculating, or you're guessing, in other words, that, a particular investment or a company or whatever will rise in value or fall in value, depending on how, you place your money. If you place your money to go long, or you place your money to buy, you're expecting the company to go up in value. or the stock to go up in value. And if you sell or go short, you're expecting the company to lose value, right? But when you deal with fundamental analysis, you're always, waiting on hearsay or maybe guessing or trying to, second guess and things like that. And we can see that's the case in, this company. The case in this company was that, everybody was hedging their bets at them potentially winning this lawsuit. So people bought the stock in, anticipation of buying this lawsuit. But again, this is not really any sort of solid, concrete information to kind of go on based on, purchasing the stock. And as you can see that, the guess or the hope or the gamble fell flat when it comes to this company, right? So this is another reason why we don't like to do fundamental analysis, because fundamental analysis technically or typically contains a lot of news, noise, and opinions, right? Like everybody's got an opinion on what's going to happen. There's news coming out, people saying, oh, this is going to happen or that's going to happen. And a lot of times it becomes very confusing to understand, what's really happening with the stock. So today we're going to look at the technicals of the stock and see exactly where we're at with the stock when we look at the technicals or the charts, right? So let's go to our trading view. We can see here that we're on, let me go to HCMC, HCMC. Yeah, we're on Healthier Choices Management Corp, ticker symbol HCMC. We have our 4-screen setup. This is our focus on investing template. And first we're going to start with the monthly time frame. So the first thing you will notice on the monthly time frame is, the lack of activity really on the stock, right? If we kind of zoom out a little bit, you can see how flat it goes as soon as we zoom out. So if we go back to 2015, this seems when it had its initial public offering. So this is when it was entered into the market. And you can see that this chart is very choppy. I mean, you can see it started here. Look how small this bar is, and with a massive candlestick coming down here. We saw a massive gap down. And if you look at the chart in terms of the price, you can see how small the stock started at, right? This is less than a penny, right? This is fractions of a penny, right? So we can see initially on the monthly time frame, very little activity. This is when the stock was entered into the market. So you can see massive movement in the long wick, but the small body. Then it immediately tanked with a gap down. And then you can see it basically fell to almost nothing, you can see. And this is from 2015 all the way up until, if we're going to stock a bit closer, we've seen nothing until, we're looking at the 4th of January or the month of January in 2021, where we saw a massive spike in this market. So, this is around, certain news around the lawsuit, people getting word of this, again, this news, noise, and opinions that this is going to be something, etc., etc. So between, January and May 2021, you can see a massive spike in the stock. You can see, if we get our ruler out, we can see that, if you want to take from where it was to where we're looking at about here, we can see like a massive amount of growth, for what is that, 46,417.50%. But we're looking at great movements like that because, the cost of it is so small that, any sort of movement is going to be a massive increase, right? So we're here at 0.00065 of a penny, right? So we're looking at, or should I say, of $1. So we're looking at a very small amount of value on these stocks. So any little movement is going to increase it by multiple. So, unless you had, some kind of inside information or you was in the stock early and, you managed to ride this pump, it's not necessarily, something that looks really great. And again, this would have to be a fundamental play because it wouldn't be a technical play, as the chart does not look great for a technical play, right? So we're looking here and we see this massive spike. And then what happened here was basically everybody that was in it previously that had bought stocks or whatever had immediately sold it off. So we can see here, if we get our tool, we can see that this after this massive spike here, we saw an immediate sell-off. We saw a price tank all the way back down. So this was generally probably people who had already had their stocks prior to this. You know, probably a lot of these people might have even been part of the, you know, initial public offering. They might have been given their stocks as part of the company and whatnot. And then this hype that was created for the pump allowed people to, you know, get out of the position that they held of the stocks, right? So, you know, a lot of these companies, you know, these types of companies, they can be very good with their propaganda and things along those lines. So, you know, you have to be careful. You know, when these companies first start, they issue a lot of their shares and their stocks to people who work in the company as part of, you know, helping to build it. So, you know, sometimes you'll find that they would give a little bit of hype to the company that, yeah, this is going to happen, so forth. And then this boosts the stocks, and this allows them to get rid of the stock that they initially had when they was gifted at the start of the company. So, you know, when you whenever you see a chart pattern like this, you can see it's basically a pump and a dump. So it pumped, you know, from, as I said, from January, and by the time we hit, you know, March of this month, you can see that over those few months that, you know, the price boosted and then immediately tanked, right? So, you know, again, this is to do with people getting out of their positions, and also, you know, we're looking at this whole lawsuit situation, right? So, you know, we can see where our all-time high was this massive spike here on the 1st of February, 2021, or the month of February. And then we've reached nowhere near that. And as we can see again, price is on its way down. So this is the monthly time frame. So let's take a bit of a closer look in the weekly time frame. If we look at our weekly time frame, we can see, you know, a better look at what's happening. We can see, you know, if we look at our moving averages, you know, we use moving averages as a way to, you know, get a better analysis of what a stock is doing. We have a whole video on moving averages on our channel, so go and take a look at that. But we can see that price, you know, was basically trading very flat. You know, we have like a flat movement along most of the charts, and it's only until we get, as I said, we got to this, you know, January area that we saw this massive spike. This massive spike took the stock price above our 50 simple moving average, and it took it above our 200 simple moving average. If we look at our trend filter, we could see during this period, it was actually green. So we're actually seeing a green trend filter all the way up until the month of July 2021. So this is when the stock went from, you know, a bullish stock until a bearish stock. So it was bullish for, you know, a few weeks. As I said from before, it was bullish from, you know, January 2021 all the way until July 2021. So what, 7 months? You want to say 7 months this stock was bullish for. But, you know, as I said, it was just really a spike that really caused it to go bullish. It wasn't like sustained growth. So it was an instant spike, and then ever since then, it kind of fell down. If we look at our key support and resistance levels, we can see we have one here at our all-time high. We have another one here that is the high of, you know, May 2021. So we can see this is like our second spike. So typically what happens is, you know, the initial spike or the initial interest happens, people then sell off. And then, you know, people that get the news late about the stock, they typically come in secondary and spike it up for a secondary spike. And then we see price fall away again. You know, these sort of things you've got to be careful of, because, you know, people will come in seeing this stock with the massive spike, and they'll think, because it is the massive spike, now it's time for me to get in. But I always have a statement that says you can never make money off of past price action, right? So people think that they see a stock spike and that's the time to get in. No, the time to get in is here before the stock actually spiked, right? because this is where you make the money in the movement, right? People get excited seeing, stocks with a massive spike and a massive uprising. And then they think that, okay, if I get in now, then somehow I can make money from this past spike, which is not a thing that happens, right? This is already gone. This happened in the past. And unless you've got evidence or some kind of strategy that shows that this spike is going to happen again, essentially all you're going to do is end up losing your money, because as we can see, the direction of this stock is very much bearish. It's very much going to the downside and getting lower and lower. Not only that, as I said, it's trading below our moving average. It's trading below our 50 simple moving average and trading below our 200 simple moving average, right? So let's take a look at the daily time frame. If we look at the daily time frame, we can see that it's quite a scatty chart. If we take an overall look, again, as said previously before, the overall, shape of it is very bearish. We can see that if we zoom in a bit more, we can see that we have our death cross here. This is our death cross, signifying it as a bearish stock when the 50 simple moving average crosses below the 200 simple moving average. So again, this stock is very much bearish. If we look at our key support and resistance levels, similar story at our all-time high, and that also at our kind of resurgent spike. We can see it here as well, And, this goes back again to speaking about short squeezes. When people look for short squeezes, the idea of a short squeeze is that the price of a stock is increasing and it makes it harder for people to get out of their positions. That's not what we're seeing here again. We're seeing price decreasing and, making it easier for anybody to get out of their positions if the short squeeze play was something that you were looking to get into, right? If we take a look closer at some of these bars and these candlesticks, we can see that this very much of a controlled action. You can see how all of these, candlesticks and bars finish in a very squarish fashion. So this typically means that, there's either some kind of controlled trading action or there's, hard stops to price value. As you can see here, we can see a very much straight, resistance level. Same here, support levels, resistance levels. It's very blocky and choppy. And this indicates that, the liquidity in this stock is not very much, it's being very much restricted in the way it's being traded. And this is why you're seeing these blocky movements. So, this is not a good sign for, as I said, for liquidity, for, volatility. Any stock you want to trade, you want to have it to have a certain amount of volatility, so that it's free flowing, and it's the movement that you make your money off of, right? You make your movement in it rising and falling in price. But you can see here it's very much controlled. It's in a one big long consolidation. If we get our marker, we can see that if we go from here to here to here, we can see it's all perfectly in a straight line. So it's in a perfect consolidation. That means price is not really rising or falling. It's just kind of being trapped in this continuous sideways movement. If we take a look at our final daily chart, this will give us any indication if there's any kind of entries. On here, we have our bespoke focus on investing entry indicator. If we see a red mark, let me highlight it for you. If we see a red indicator above the bar, that means there might be a bearish opportunity for you to go short. I'm trying to see if there's any long indicators. Well, there isn't any long. Oh, there's one here. So if I zoom in a bit more and bring the chart here, you see this green indicator below the chart, and this gives us an indication of a possible long opportunity. As you can see where it showed actually price went up, and I think this is actually the spike that we saw previously. Yeah, so we were likely to see, more green indicators here again. So, if we look more to kind of current time frames, again, because we're in this constant consolidation or sideways movement, there is no entry indicator either to go long or to go short. Right, our last one that we saw was here on the 8th of December 2021, and that was for you to go short. So, unless you're looking to go short with this stock, there's not really much of a opportunity here. I mean, our if we go back to here, if we're looking, January 2021 times, you can see that our resistance level was, let's zoom in a bit and see what kind of price we could be looking at price to go back down to. So if we draw our resistance level here and we look at current price, we're kind of trading around that price already. So there's not even really an opportunity. If we were trading, say in this kind of area, then you could maybe say, okay, you could ride price back down to our previous, resistance level. But as it stands, we're already at our level here, which is already, as I said before, this section here that we're in is a consolidation level that is already trading around our resistance level. If you maybe wanted to look at the support level of previous past price action, we'd have to again zoom in. Let's bring the chart along to see where the absolute bottom of this chart has been. So if we want to take our support level and say our support level is around here, and it's a bit low, it's just slightly below it. But if we come to our current price, can you zoom out a bit? We can see where we're currently trading in relativity to that. So if you wanted to take the gamble or the risk to maybe trade price from where it is down to our, current support level, remember support and resistance are not defined levels. They're generally areas, right? So this is why we're seeing kind of these long wicks on the bars here. For highlight, like these long wicks, it's kind of like price attempting to go a bit lower. But to me, honestly, there's not much opportunity here for price movement to go down. We're trend traders, and we can see that the trend of this stock is to go bearish. It's on the way down. So you'd want to get into a trade that also rides the trend back down to its lows. But as you can see here, on previous price levels, we're having a resistance level here. We're having a support and resistance level here. We're basically trading at those levels. And we can see that this middle level here is essentially where we're seeing, was it bring up a bit? Is essentially where we're seeing these, long wicks go to. These long wicks are going to its previous, support and resistance level. I mean, is there an opportunity to probably ride it from this level down to, this bottom level? Of course there is. There's a possibility of that. But, how strong of a movement is it? I mean, look how long we've been going sideways. And overall, I personally wouldn't say that this is a great opportunity in terms of stocks. There's way more stocks that are, have a lot more movement in them, a lot more volatility and a lot more opportunity for you to make money in these stocks. So, unless you're looking to make a play from, as I said, this support and resistance level down to this support and resistance level, there's not really much opportunity to be had here. As previously stated, this whole play was essentially a play based on the lawsuit. And the play was actually a bullish play, right? The aim was for, price to go upwards. But as it didn't, it turned into a bearish play with price to go downwards. But as we can see here, most of the opportunity is gone. We've come from our high all the way up here, and then now we're basically at our bottom, and there's no guarantee that price will actually reach its rock bottom, especially with the hype around it. As people getting involved in it, it might keep it at this level, So, yeah, so that's basically my assessment of HCMC. To summarize, I would say that, it was it was always a fundamental play on the basis of this lawsuit going the way of HCMC. This is why we got our pump and our spike. It didn't end up doing that. So it turned from a bullish play to a bearish play. But most of that play now has actually played out. I said there's only a small gap between its previous lows and where we're at now. And unless you're looking to get involved to move that small distance, then I would say that there's not really much opportunity here, right? I always talk about opportunity cost, and opportunity cost is essentially, while you have your money in one stock, how much more could you be earning in another stock that's moving, right? So here, I personally wouldn't look to get involved in this because of opportunity cost. There are other stocks that are moving way more than this and offering way more opportunity. All right. So if you would like to, get more involved in, different stocks that are moving, commodities are moving quite well now, any sort of Forex plays, then go to focusoninvesting.io. You can also, learn how to analyze and recharge yourself. Also, if we zoom out again to our template, this is our custom template. And all of these lines and indicators are our bespoke indicators that we've custom coded. So if you'd like to get any access to those, go to focusoninvesting.io, where you can, I said again, learn to trade and also get access to these indicators. If there are any stocks that you would like me to analyze, then leave it in the comments and I'll do a review video for you. All right. So until the next video, take care.